I didn't know anybody that had a ton of money, didn't have any rich relatives. So like when I got into the real estate world, I always thought, well, I've got to save up enough to do it myself. And you just can't scale like that. But if you're good at finding deals, you will be able to find money for sure. I like to use hard money because I can scale it, right?
If you want to search hard enough, you can probably find private money that is not even hard money.
We're at a doctor's appointment. I mean, I know typically high doctors are high earners, so we'll be sitting there.
Doc, this hurts because I just did this deal and I paid this guy 12%.
Well, real estate's kind of a sexy industry. Like people want to be in it, even if they don't have the time to find the deals.
All right, everybody, welcome back to another episode of the Evernest Real Estate Investor Podcast. I am one of your hosts, Spencer Sutton, and I'm joined today with my co-host, Adam Hobson. Adam, welcome back to the show.
Thank you.
All right, good to be here. Good to be here with you. Today we're going to be diving straight into, last time we talked about how people find deals, but there's a problem when you find a deal. You got to buy it.
That's right.
unless you do wholesaling, where you're truly just kind of a broker in between, selling the contract to somebody, right? So we know that, but if you wanted to, let's just say you wanted to buy a rental, or you wanted to buy something that you could do an owner finance with, or you wanted to flip it, you wanted to rehab and sell something on the retail market, maybe make a little bit more money, you're going to need to take this property down. And I believe there's ways to do this even if you don't have any money. I've seen people do this. I've seen, people who are really good real estate investors that this is essentially exclusively what they do. They don't use any of their own money. They partner with people. There's all kinds of different ways that you can package this, but just your initial thoughts on, hey, you got to be able to buy these things, but you can even if you don't have a lot of money.
That's right. Yeah. I mean, like you say here, the strength of partnerships, whether, there's several different, I'll wait and let you, introduce all the different types. But if you're really good at finding deals, but you don't have the money, there's somebody out there there's money out there to be found. Let's put it that way. And I always, when I was growing up, I didn't know anybody that had a ton of money, didn't have any rich relatives. So like when I got into the real estate world, I always thought, well, I've got to save up enough to do it myself. And you just can't scale like that. But if you're good at finding deals, you will be able to find money for sure.
Yeah, that's right. I think finding deals is the hard part.
That's right.
Finding money is not.
Yeah.
If you, and to me, it kind of all comes back to putting yourself out there.
Yeah.
And saying, hey, this is what I'm doing. And you, in my opinion, you need to kind of have this lined up before you find that deal, because at least in my experience, part of the power of making low offers or making offers that, are deeply discounted is the ability to buy that property. For me, it was the ability to say, listen, this is what I can pay, and I'll close. We'll close this week.
As soon as title's done.
Yeah, as soon as title's done, give me 3 days.
Yep.
We've closed one. The fastest we closed one was within 24 hours.
Wow.
And it was an inherited house. The siblings and the wife, estranged wife, came in from out of town to Birmingham. They called us and they said, we're only going to be here through tomorrow. We want to sell this house. They didn't go inside the house. It was their dad's house. He passed away. They didn't want to have anything to do. They wanted to leave every single thing in there. They didn't want to take a thing. They didn't want to see a thing. And we closed the next day.
Wow, you worked some magic on that.
We worked magic. Yeah. I remember Roland calling me, he was my partner, and it was like, I think this is the right offer, and we're going to have to pull some strings and ask for a bunch of favors to get this thing done. Yeah. But we did it, and turned out to be a fantastic deal.
That's awesome.
But finding deals is very difficult. Financing them, to me, is very doable. So let's talk about when I'm thinking about this, I'm just thinking about all kind of different ways that you can do this. And, we talk about, or I've talked about on some of our YouTube videos before, OPM, other people's money. Let's talk about, Adam, when you think of going in with somebody, do you think of, hey, I'm just going to borrow money from somebody, or you think about partnering with somebody? How do you look at that, or have you done both of those?
Yeah, so I've done both of those. And before I start, I guess I'll say when I first started, I always looked at borrowing money as, like, oh, well, I'm not good enough, or I'm too poor, so they have to give me money. It's not about that. There's people,
They're doing me a favor or whatever.
Yeah, they're doing me a favor. To this day, there are people that have, more money than they know what to do with, and they still use other people's money because they would rather risk, I guess it sounds bad, they'd rather risk other people's money or not tie their money up because they're going to do something else with it. But, once you realize that, hey, this is how you scale, it doesn't matter how much money you have, everyone does this, right?
Yep.
So, using other people's money, I guess to your original question, what was it about the partnership or?
Yeah, like which ways have you done it? As you said, you've done it both ways.
Yeah.
Let's talk about, obviously the traditional way of using somebody else's money is the bank.
Yep.
And the reason people decide to go a different route with the bank is because banks are not always great to borrow money from.
Yep.
It takes a long time. They ask for a lot of unnecessary things. Sometimes they don't even understand the deal, and especially when they see the shape of the houses that we're buying them in, they're like, I don't want to loan any money on this. Thing's a piece of crap.
Yeah, and unless you have a line of credit or let's say a HELOC or something where you have that money accessible, like you mentioned if you can close quickly, you're going to get the better deals, right?
That's
Cash
right.
is king when you're trying to get the best deals. So I have done it both ways. I've done it with, let's take flipping, for example. I've done it with a partner where this is after, I had a little bit of success in real estate, had some funds put back. We found a house that, needed, I think we bought it for 30. It was like a $200,000 ARV house. We both put in half of the cost to buy it, half of the rehab cost, and then, we split the profits at the end. But, that's only if you have some funds built up and you don't want to use other people's money. That was when I was first starting out as well, at maybe the third house that I flipped. But ever since then, I've used either hard money or private money. And I don't know if you want to explain what hard money is first before we get into it.
Let's talk about hard money. I think hard money is if you're in real estate, if you've been in real estate long enough, you've heard the term hard money. And hard money is essentially it's a short-term loan at a higher interest rate. Usually comes with some points, what we'll call like percentage points. You and I were just talking about this, but it's really meant to typically fund the purchase and in a lot of cases fund the rehab of the property. And then what you want to do is then refinance because it's it's too high of an interest rate. So you want to refinance that and get it at a better interest rate and then lock up some long-term financing if you're going to hold on to that property, if you're going to hold it for a rental. But obviously if you're going to flip it and you can flip it within a reasonable time frame, I would say less than 6 months, then that's probably when you would use hard money.
Yeah, and that's typically when I use hard money. So like when I flip a house, I'll take, and I just factor all this in, when you're going to buy it, right? So, let's say that you're somebody that's doing 10 or 15 flips a month. Your money can only go so far. You're going to have to eventually, if you want to scale, you're going to have to eventually do it. If you're just, hey, I have a 9-to-5 job, I like to flip 1 or 2 houses a year because I make a good income so I can put that money into it, that's great. You probably don't need it. But I like to use hard money because I can scale it, right? So, if I buy a house, you typically have to have a little bit of money to put into it. The points, any hard money lender, for the most part, is going to want you to have a little bit of skin in the game, right?
Yep.
So let's say that, closing costs are, just for round numbers, $1,500, depending on the price of the house. And then you've got points, which is 2%. So, let's say you have 2 points, that would be 2% of the purchase price. So, $100,000 house purchase, you're going to pay roughly $2,000 in points. So $2,000 in points plus your, $1,000 in closing cost, you may have to bring $3,000 or $4,000 to the table, but they're funding $100,000 and they may even fund the rehab amount too. So, let's say it's $100 and then you got a $40,000 rehab budget. So you're borrowing $140, you're only putting in less than $5,000 up front. And then maybe you're making payments of $1,500 a month for the duration of the loan.
Of the loan. Yeah.
Typically 6 months is usually the standard hard money loan. I usually factor in 6 months of hard money payments and I factor in 6 months of holding expenses. I've never gone that 6 months so far, luckily.
Now, hold on.
Yeah.
6 months of hard money expenses, then 6 months further, so essentially 12 months.
No. So six months of hard money and then 6 months of holding costs during that. So power, water, insurance,
Gotcha.
All the kind of things that you have, gas, if the house has gas, all that kind of thing. So I typically do 6 months because I usually do it in 3 months. Longest I've ever gone is 4, but 3 months is typically, 1 month to rehab it, maybe a month and a half, and then a month on the market if you chose wisely, and then, maybe a month to close it. So 3 months, 3 to 4 months is typical. So it only makes more profit at the end if you can factor in 3 or 4 months 6 months of hard money. You only use 3 or 4 months, so you're saving a couple payments and, those holding costs and everything. So I typically do it for 6 months, but like I said, you factor it in on the deal. If you factor your rehab costs right, your numbers right, your buy number, and what you can sell it for, then you're going to be golden at the end.
Yeah. So let me ask you this: let's pretend I'm a brand new investor, and I'm coming to Adam for some advice, and I say, hey, can I take you out to get some coffee? And you're like, you're gracious with your time. We sit down, and you're like, hey, or they're this, and I'm like, I'm gonna be this person, and I say, hey, Adam, I think I'm close to finding a deal. How should I think about getting money? Would you advise somebody to go the hard money route if this was like their first deal? I mean, you mentioned you like it because you can scale it.
Yeah.
Or would you tell them, try to get a HELOC on your home, right? You get a home equity line, or find some other way to do it.
Honestly, I would tell people to use hard money on your first one. And here's why. So, as a hard money lender, they're looking at mainly the deal, right? They're not looking at your credit score. I'm not pulling Spencer's credit. They don't care what your house looks like, your personal. They don't care if you have a vehicle, right? They're basing it off of the deal, because ultimately they're going to have stake in this property. Let's say they lend on this house, and you're only let's say you're buying it for $100, but this is a $300,000 house. They know that if you don't follow through and that you don't, if you don't finish it, that they're going to take that house back.
Right.
So a good way to know if you have a deal and there's no hard money lender that wants to touch it, that means you really don't have a deal.
You don't have a good deal.
That's kind of kind of a fail-proof way. Now, there's people out there, I'm sure, that will lend on anything because they have more money and maybe they do this all the time. But for the most part, a hard money lender is going to look at that deal. And I've had it before where they've said, Adam, I don't think there's enough meat on here. I don't think I can make, I don't think you're going to be able to turn very much profit on it. And I think I've actually turned that deal down or backed out of it because somebody gave me that advice when I was first starting. But all that to be said, it double checks.
It's a good way to double check that deal.
That's right. Yeah. So I would say if you're fairly confident that there's all kinds of stuff that go into it. You have to have contractors set up and all this. And any hard money lender is going to kind of give you these questions if they're any good. Hey, how are you going to do this? Especially if they've never lent to you before.
Right.
Do you have contractors? Do you have this and that? So I would say that it's probably a good way to do it. I would just have, some money set aside in case it goes longer than what you expect,
Yeah, that's a great point. I was talking with a hard money lender the other day. We were speaking on the phone, and he was telling me how he looks at it, and he said that he'll loan 100% of the deal as long as that deal is 75% of ARV after repair value minus repairs. And he also wants to see where I'm pulling comps from. So I have to send him pictures of the deal, kind of my pro forma, and then comps, like where did I get my comps from? And so as long as I send him all that, he'll fund 100% of the deal and even rehab costs.
Yeah.
So,
well, the good news is once you do 1 or 2 deals with a hard money lender, and I'm not talking about, there's some of these nationwide companies, Kiavi, maybe is that one? There's like some of these big nationwide companies that do this, and their process takes a little bit longer, but they're going to have the same process every time. They're going to underwrite it the same exact way. We've got a mutual friend, Trey, that lends hard money, and now if I ever call Trey and say, hey, can you lend on this? He doesn't ever even analyze the deal. He just knows, because I've done so many with him. He said, look, if you think it's a good deal, I trust your judgment.
Yep.
Same thing with Brian. Once you build up that trust, you're not going to have to show them all this stuff to start with, every time. Right. So I will say the first few you do is going to be the hardest. Even if you do 1 or 2, you're going to have before pictures, after pictures. You're going to say, look, this is how much money I made. You're going to show that you can do it.
Yeah, that's a great point. And the person I was speaking with is a very successful real estate investor in Memphis. And so he hasn't done a ton in Birmingham. And so he wants to be, he doesn't know Birmingham like I do.
Sure it's a deal.
Yeah, that's right. Versus Trey and Brian, who you would borrow money from, they know this area. And so when you tell them where the house is, they already can have a mental picture of what this deal's going to look like.
Yeah. Which, full transparency, my end goal, I want to be a hard money lender. Like, I think that is the best. Like, I've just seen people that have had these big portfolios and they've cashed out, and now that's all they do is hard money lend. Man, that I feel like that's the great spot to be. Like, other people are finding the deals, you're just funding it, you're making interest on it. That's definitely a long-term goal of mine.
Yeah, no doubt. Apparently, that's I've known several real estate investors who've cashed in and done this, and they seem to like it.
Yeah,
they seem to like it better than like owning rentals or whatever.
I think so, because everybody else is taking all the risk and they're finding the deals and paying for marketing, and you're just there when the deal happens to fund it.
Yeah. All right, so hard money lending. Let's talk about other ways that people structure deals, because it's not. This is the interesting thing. If you want to search hard enough, you can probably find private money that is not even hard money. It's just like regular money. I was mentioning to you before we started, I've got a buddy here in town who has $100,000. He just has in an account. I've got $100,000. I loan it out to this real estate investor. He pays me 8%. He may have gone up a little bit. This is probably a year and a half ago when I was talking to him about this. He may have gone up a little bit, but he doesn't charge any points. And it's like just there for, it's like essentially like a line of credit at the bank. So that's another way you can do it. You can find people who just want to earn more money on their cash that's sitting there. You could do, when I started, I had two partners that both had high-paying jobs, and I was willing to stop my job. Like, hey, I'm going to do this full-time. And so the three of us went and got a line of credit at the bank and just got a big, like $1 million line of credit, and we could draw on it whenever we wanted to. Yeah. And that is a fantastic way, because you're paying interest only, and like hard money, except it's at more reasonable rates. And you just kind of use that money. It kind of flows in and out, and they don't really care what you're using it for the most part.
That's right. You don't have to get it approved every time.
You don't have to get anything approved. You're like, listen, the bank would never approve what we were buying, but they don't care. They just know you're good for it. And so that's another way you can do it. But let's also talk about JV deals or joint venture like partnerships, because there are some people out there who like to loan money, but they want to be a part of the deal. Have you seen that be successful? I've got a friend who does this almost exclusively. What about you?
Yeah, so I know people that do it where they will, it's probably the same way with your friend, but they want to be in real estate because, let's face it, real estate's kind of a sexy industry. Like, people want to be in it, even if they don't have the time to find the deals. If you're out there, let's say it's me, I'm out there finding the deals and I'm doing all the grunt work, but they're funding the deal, then you're splitting it 50-50. That's a great way to do it until you can build up. And some people still do it regardless, still to this day, even after they're successful. But once you have some success in it, let's say you're making $40,000 on a flip and you realize, hey, I'm doing all this work and, they're just funding it and they're collecting half the profits. Eventually I think you may want to get away from that. But some people like it. They're like, hey, I don't have to put any money into the deal. They fund everything. I like doing the oversight, the everything else into the deal, and we just split the profits and we both make $20,000 on the flip. You know? So I think there's pros and cons to that. But what about yours? So how does it work with?
Yeah, that's exactly what he does. And so this guy was a real estate investor. I sold him houses back, prior to 2008. 2008 hit, and he went through a whole bunch of trouble, like a lot of people did, and so he wasn't able to go get a traditional like line of credit or loan from a bank, and so but he was really good at what he did, and he was a great house flipper, and had an eye for it, and was really, really good, and so he just started connecting with other people that had the money, and they would just do partnerships together, and he was doing, the last time I spoke with him about it, he was still doing it. This is years later. And he had a reserve of money, and I guess he just felt more comfortable doing that. And the other people did put some input into the deal, as far as like they gave him thoughts about maybe the deal or what he should do for the rehab. But most of the time he handled everything, and he was just using their money, but he still enjoyed partnering with them. I never asked him why he didn't just like start doing it himself and do it differently. Maybe it had something to do with what happened in the crash. I don't know. Yeah. But he was very successful, or is very successful at what he does, and has a great eye for it. But yeah.
Well, and I'll tell you, like, for example, I have a friend of mine that, and I'll get into this more in a second, but I have a friend of mine that, started, like he's done a few deals with me, but it all started from, we work out in the same workout group, and we were having coffee one day, and I just said, hey, if you know anybody that's interested in, loaning on some deals, let me know. And he said, well, actually I might be. So he had like $200,000 sitting in a money market account. At that time, it was making like 0.03%, right? Hardly anything. And I was like, what if I paid you 8%, like your friend was saying? So it's a no-brainer, like they're like, hey, it's backed by real estate. They're holding the mortgage and note on this property until, it's paid off. So if anything goes sideways with me and I don't perform on my end, they foreclose on it, and they have this asset that is below market value,
Right.
But I will give you some secret sauce that I heard somebody say that's worked great for me. Instead of, because it can be kind of daunting when you go in like to try to find private money, because like me and there's money everywhere. People that, whether it's, your grandmother or friends, there's people out there that have money you don't even realize have money that's just sitting there, that you're going to be helping them out to make a good return, and you're also going to get what you need as well. But somebody told me, hey, don't ever go out and say, hey, can I borrow this money? Just talk to people, tell them what you do. And that's exactly how I have 3 or 4 of these private lenders. We'll go to coffee, and I'll say, hey, this is what I do. Give them maybe an elevator pitch while we're talking about whatever. If you know anybody that's interested in making, 8 to 10% on their money, let me know. I'd love to talk to them. I'm not asking these people, but in their head, they're saying, well, heck, because this guy told me.
I don't want to give it to my friend. I want to have this money.
He said, well, I might be interested in lending. Now, I didn't ask him anything, but he's come forward and said, hey, what about me? Could and then we'll start this conversation up. So if you're scared about asking people about this, that's a great way to do it. Tell people and just say, hey, if you know of anybody, please let me know. It's a great way to do it. And the last thing on this private money that I'll say is you can also do this for rental properties. So, I buy properties now, and I typically owner finance them, but I will use private money so that I can scale. If I buy 2 or 3, I'll use a private lender for one of them, and I typically pay 12% over a 5-year term, right? I do it to owner finance, but you could do it for a rental. So let's say you don't have any money for a rental, but you find a good turnkey around here. Let's just say you get a steal on one and you find one for 50 or 60 grand. Well, if you do that on a 5-year note at 12%, let's say maybe your payment's $1,200 or $1,300 a month for 5 years. Well, you could find a tenant, and even if you're not cash flowing for that first 5 years, you're buying it like a car on a 5-year note, but you're keeping it as a long-term asset. So private money will work, and we could probably get into that more in other episodes. But private money is a great way to buy rentals, to fund flips.
To do anything really.
Yeah.
And I think I think you had a great point when you're talking about going out and asking. Is you don't have to ask people, you just need to tell people what you do.
That's right. Yep.
If you tell enough people and you tell the right people. So that's a great question. How do you find, who would you be going out and telling, right? So you're talking about having coffee with people. If I were doing it, I definitely let my family, people close to me who trust me the most, I'd be telling them, this is what I'm doing. If you know of anybody who wants to earn extra money, then let me know. I'd love to talk to them. I'm going to show them this deal.
Yeah. I
think family first, and then kind of move out from your spheres of influence there.
Yeah. That's
Thoughts
true.
on that?
Yeah. And, my wife, she'll kind of poke fun at me or just kind of roll her eyes sometimes. But when we're at a doctor's appointment, I know typically high doctors are high earners, so we'll be sitting there.
Doc, this hurts because I just did this deal and I paid this guy 12%.
Well, it's like when my kids are, they're there and they'll say, well, Dad, what do you do? Oh, actually, I buy and sell real estate, and, I help private investors, earn 10 to 12% on their money. Who knows if it'll ever come from it? But
sure.
They're like, okay, well, hey, let's talk after, let's go get coffee or something one day. You just never know. The most I've gotten is this workout group, guys of 15 or 20 guys that used to get together. A lot of these guys are in sales. Some of them are in medical sales, and they've got really good 9-to-5 jobs, but they have no time for real estate, right? I would just tell everybody. Now, if you're going somewhere, obviously to a food bank or somewhere, you got to know your audience.
Your audience, right.
But I just kind of tell everybody, because there's also people that you would never think have extra funds sitting there that are looking for a return, and they may not even know, and I'll say too, a lot of people have 401ks and they have money just sitting there. There are, you can get self-directed 401ks, self-directed IRAs, and I haven't gotten to the point where I help people set that up yet, but I know several people with checkbook 401ks that there's different rules and regulations, but even if they don't need the money now, they can lend out of that, put it back in there, and it just kind of helps build their retirement.
Yeah.
So there's all kinds of different ways you can do it, but finding the people, I think just telling everybody what you do, not in a pushy way, just, hey, this is what I do while we're discussing things.
And you know what? This is not something like you don't have to be a professional full-time investor to do this. This can be something where you're saying, hey, this is what I'm doing this on the side. You know, my wife and I are buying, or I'm buying 1 house a year, 2 houses a year. This is what I'm doing. I think just like starting off small is a great way to do it too.
That's right. Yeah, and I mean it's going to be hard the first couple times that you do it. I would say if you get 1 or 2 deals under your belt, document everything, take pictures, and just kind of have that, have it kind of readily available. Like I've got now flyers that I had, like I went to Fiverr, which is like, you can pay $5 or $10, have somebody make these up. It breaks down the deal. It shows exactly what my private lender made, their cash on cash return. It has pictures of the house and kind of what the investor made. And I just have it in a packet that I'll just say, hey, look, let me shoot you some information over. I've shot a few videos that I have links to, and I'll just send them this kind of packet and say, hey, if you're interested, great. If not, that's no problem either. They'll look at it. I've never had anybody come back and say, I don't want to do it. After they see a couple of deals that you've done and they see that, okay, this guy's legitimate. So all that to say, the first couple deals are going to be the hardest to do, but it can still be done.
Again, it's like getting that proof of concept.
It is.
That you want to get that proof of concept. Hey, I've done it, but I think that's a great idea of just putting together like a spec sheet. These are deals that I've done, and here's the return I've given my investor.
And like on the videos I do, like it's just me, I'll share my screen on the computer and I'll go through like, hey, this is exactly the deal. I'll show them the mortgage and the note that the lender will get. I'll show them how their money is secured by real estate, by an asset that's going to be appreciating over time. If something happens and, God forbid I don't pay you back, which, I've never not done, then you would foreclose on this. Now the asset is yours. So breaking it down for them, just kind of showing them, but getting that first one where you can do that, it's going to be kind of the key.
Yeah. I hope that this episode just kind of shows you there's really no excuse. If you really want to do something, you can.
That's right. Money's out there.
The money's out there. If you can hustle and find the deal, and you can get it financed. And then, and honestly, I know that for me, the hardest was doing the first one. And that's why I started wholesaling, because I just wanted to get my feet wet. And it was probably the lowest risk that I could start off with until I felt more comfortable to do other things like buy rentals and stuff like that.
Yeah, that's right.
All right, everybody, that's it for this episode of the Evernest Real Estate Investor Podcast. I want to encourage you, we hadn't even talked about this, but we also have this on YouTube. So you can actually watch these podcasts. They're obviously on Spotify and Apple and anywhere you get your podcasts, but we also do have a YouTube page. However, we're not much to look at. We probably have radio voices or podcast voices, but anyway. All right, everybody, we'll be back next week with another episode.